Lesson 5: How charting incorporates all data in one place. Remember, the market discounts everything. So, let's take a look at the S&P 500. This is the monthly chart where each one of these candles represents 1 month. Do you remember March of 2020? March of 2020 and February of 2020 was during the peak of our COVID-19 worries. If you could see here, we sold off pretty harsh between the months of March and February. These 2 months right here. But soon after, we rallied way past those points. And we can see we did kind of hit a little bit of a snag, so to speak, right around September, October, where we recovered all of our pre-COVID levels. But we soon broke past that. Now, if you were to look at things fundamentally, we are still, in my personal opinion, not anywhere near the economic strength that we may have been around this time. But yet, if we pull further, we have gone much further here in May and June. Much further than our pre-COVID times. So this is where we were pre-COVID. Here's where we are now. Much, much higher. That's over 100 points higher, in fact, from the COVID kind of middle tier ground of 300 to where we are at 411. And the market knows everything, right? When we got our stimulus checks down here, the market bought itself up. Where else would we have known that people were spending their money in the stock market other than by looking at price action? We didn't know why, or that they were spending their stimulus checks, or even if that is actually what happened. What we know happened is market participants decided that at this level here, it was a good time to buy. And at this level here, at this level here, at this level here, and at this level here, time to buy. Maybe we got some capitulation, or maybe just some small short-term consolidation. But we know that the market had a little bit of a stutter step here and continued on upwards. We don't need to know why. We just need to know that this is what happened. Whether or not the fundamentals agree, which they do not at this time, this is fact, and this is what happened. And that is why the market discounts everything. If you were to have waited till the economy recovered, if you sold off your position due to economic fears and worries that the US economy was going into a recession, even though we are pretty low from our high points in the ending of 2021, you still would have lost all of this. Now, the charts can also tell us sentiment. If the chart looks like this, we have a period of caution, a period of relief, a period of hope, a period of optimism, confidence, conviction, euphoria, greed. Then on the bottom end, going down, we have denial, pessimism, fear, despondency, and then panic when we fall off a cliff. And as you can see here on this little graph of the stock market and economic recessions, we can see that during a recession, it can signal, the stock market anyway, can signal a reversal into economic growth as being a leading indicator of fundamental data. We can see here during this recession, stock market started to slowly ebb around and signal the economic growth. And as the stock market slowly skidded down, we can see that it may have signaled the recession. And as we made a recovery, signal back into an economic growth period. Now, long-term analysis of price changes in the financial markets around the world is such that a correlation is present only in the short-term horizon and only to a limited extent. It's pretty much non-existent in the long-term basis, meaning if you looked at an entire chart of the stock market and US economical sessions, we would see them being not as tightly correlated or even not correlated at all. But as I said before, fundamental analysts believe in cause and effect between the fundamental factors and stock market price changes, which in the short term doesn't seem to really work in that way. It works in the other way, meaning technical analysis is the leading indicator short term into fundamental changes in the economy. Said in another way, narrative always matches the market after the move happens, never before. Now in our next lesson, we'll go over trends and how to identify trends, because remember, the market always moves in trends.